Hey everybody, Rob Maurer here, and today I guess we'll talk a little bit about the stock, Tesla finishing up 20%, but we also have new numbers out of China for February. We also have some clarification on the full self-driving beta rollout, a new price target from New Street Research, Pierre Ferragu, and some more news from Volkswagen. We'll start off with the stock, of course, because that was a sharp reversal. The NASDAQ today finished up 3.7%. That was the best day for the NASDAQ since last November. It looked like it was going to close up more than 4%, which would have been the best day since April, but it did tail off a little bit towards the end of the day. Interestingly, Tesla did not. Tesla finished up 19.6%, pretty close to the high of the day, finishing at $673.58 versus the high of the day of $678.09. So closing at just over 0.5% off that day high. The $110 increase in the share price today is by far the biggest single day increase that we have ever seen in Tesla stock, surpassing the previous high back in January of $64 in one day. Just to have a little bit of fun with that number, if we were talking about a pre-split share price, that would have been $550 in a single day. Tesla IPO'd at $17 per share. I know there are people that listen to this podcast that have shares at that price. That's a 32 times increase on that cost basis in one day. Pretty crazy. Of course, the percentage change is more important. The 19.6% increase, out of the roughly 2,700 trading days that Tesla has had on the market, this is the third biggest single day percent increase ever. Tesla's biggest move was back on May 9th of 2013. The stock jumped 24% from a post-split price of $11.16 to $13.88 after Tesla, for the first time ever, posted a quarterly profit. The second best day, the only other day with a bigger increase than today, was February 3rd, 2020. Tesla increased 19.9%, and I really hesitate to point this out, but that day was the first trading day after ARK issued their most recent Tesla price target, which was released after market close on Friday, January 31st. Up until that point, ARK had a 5-year, $4,000 price target. This increased that to a $7,000 price target for 2024, so the time frame shifted a little bit, but alongside that expected value, they also published more of their bullish cases for Tesla as well. That being said, that time period in general was a period of strong positivity for Tesla. I went back and watched my episode from February 3rd, and I certainly didn't ascribe the entire price increase to ARK's price target. There was a lot more pressure on shorts at that point in time as well. I'll put the link to that in the show notes if you do want to go back and check that episode out for context, but when I was doing this research, since I did see that, I thought I'd pass it along because I know ARK has their new price target coming here in the next week or two. For what it's worth, after we saw that 20% increase the last time, the stock increased the following day by 14%, but then the day after that, it was down 17%, so a wild period of time there. Probably doesn't tell us a whole lot about this situation, and then again, back in 2013, first profitability, different situation there. But Tesla did continue up 11% the day after that, 14% the following day, before falling by 5% the day after that. Now, with all this being said, to some extent, I feel like it's a waste of words, because Tesla is now just back to where it was 6 days ago on March 3rd. The NASDAQ is back to where it was 6 days ago on March 3rd. It's an exciting single-day performance for sure, but if you looked at the stock last week and you looked at the stock today, they're the same. The real lesson, which I don't think we really need to be taught anymore, but the real lesson here is that Tesla is volatile. Probably no better example of that than what we have seen over the last week. All right, next up, let's talk about China. We now have new delivery and production numbers for China for February. I found D. Couric on Twitter to be a good source of this information, and he shared on Twitter late yesterday that per the China Passenger Car Association, Tesla's production from Shanghai for February was 23,632 units, while Tesla's sales for the month was 18,318 vehicles. Now, most places are going to be talking about those delivery numbers. As most of you know by now, I couldn't really care less about the delivery numbers. Tesla's delivering everything they can produce. If not in China, they're shipping it over to Europe, they're shipping it to Australia, to New Zealand. All of those are in play this quarter. Production is the constraining factor. As far as that production number goes, for me, it's solidly in the good tier. I think it's a good number. It's better than it looks because February is a short month. There's also the Chinese New Year during the month. That was, I think, February 11th through the 18th. But my understanding is that Tesla, for the most part, worked through that. They may have taken a day or two off or had a limited number of workers. But YouTuber Wuwa, who is out there tracking the progress of Shanghai pretty frequently, he posted an update around that time saying that production and construction had resumed at the Shanghai factory as early as the 13th of February. I also vaguely remember seeing an article around that time that employees were being offered double or triple pay, but I can't find that now. I did find one, though, similar for CATL from Bloomberg saying that they intended to work through the holiday as well. So point being, production was probably brought down a little bit by that, but not to the degree that we might normally expect. Anyway, this gives us our first opportunity this quarter to break out the production tracking spreadsheet. So I've entered in for February there the 23,632 vehicles produced. Over the 28 days of the month, that would give us 844 vehicles produced per day, or just over 5,900 per week. And again, I'm not accounting for any shutdown days there, so if there were some, that'd bump up a little bit above 6,000 per week. Now in the table here, you may notice that I still have December and January monthly production for Shanghai in yellow. That usually indicates an estimate in this sheet. That's because I've seen a couple of different numbers out there, so I'm still trying to get super clear confirmation about what those numbers were for those 2 months. But my current understanding was 24,800 for January. So even though that is a bigger production number than what we saw in February, that 3 extra days makes a world of difference, because that's only 5,600 per week versus February there, greater than 5,900 per week. So February at that weekly production rate, that's already annualizing to more than 300,000 per year. And seeing this progress is really encouraging. I think that sets up March well. We should continue to see progress. So I'm not putting in my estimates here. I'm just putting in an example. Don't go quoting me on Twitter or anything like this. These are not my estimates. But if we just continue to see this kind of progress, we might see something like a 6,500 per week production rate in March. That would give us about 29,000 vehicles out of Shanghai. And if that January number is accurate, that would mean that total Shanghai production in Q1 could be somewhere around 77,000 vehicles. Now, I'm actually hoping that March comes in a little bit higher than that, but I think that would be a, again, conservative, good expectation. If we then bring in Fremont just to kind of get some context here, and we assume that Model 3 and Model Y production, even though we did have a little bit of shutdown there for a couple days, and from a calendar perspective, we do have 2 fewer days in Q1 than we did in Q4. Hopefully that's more than offset by production rate increases, but if we just, again, conservatively assume that production for Model 3 and Model Y was the same as Q4, and then we pull Model S and X production down to 2,000 units, that gives us about 98,000 for the quarter out of Fremont, bringing the total to about 176,000. So again, not my estimate. Haven't fully worked through my thoughts on Fremont yet, but just to kind of get that out there as some context for what kind of numbers we could be looking at now that we've got a little bit more information from Shanghai. All right, next up here, we've got some clarification on the full self-driving beta, the topic that we talked about yesterday. Tesla planning to implement a download FSD Beta button in about 10 days. So Holmars asked Elon on Twitter exactly what this would be doing. Elon said, quote, "Assuming user approves a warning and agrees to drive carefully, it will download latest quality assurance tested FSD Beta build as soon as car connects to Wi-Fi," end quote. I believe this is what most people thought Elon meant earlier, but now we have that clarification, and it looks like Tesla will be expanding the full self-driving beta to all US FSD customers. Fingers crossed here, hopefully in the next couple of weeks. Elon, as far as timing goes, added onto this tweet saying, quote, "Build 8.3 of FSD should be done QA testing by end of next week, so that's roughly when download button should show up," end quote. Remember, Elon had said that 8.3 is the version with about 1,000 improvements, but it was a little bit odd because the timing that he had said for the download button didn't match up with the timing that he had said for 8.3, so this seems to make more sense now with those being lined up. As for Europe, somebody replied to that thread saying, "We demand the button in Europe." Elon said, "We will ask the regulators." Probably want to get my hopes up on that, but it's something at least. So obviously this imminent rollout is extremely, extremely exciting. I think that goes without saying. Another thing to consider here is the financial impact. So as we talk about a lot, there is deferred revenue from the FSD option. As Tesla delivers more of these features, they can recognize more of that deferred revenue. Rolling out this beta now to the FSD fleet in the US should have a pretty significant impact in terms of what they're able to recognize here in Q1. I don't think anyone outside of Tesla can really get a good idea of how much that's going to be. It's not going to be all the deferred revenue. Even if Tesla's FSD features were now level 5, it still wouldn't be all the deferred revenue because they have to maintain that feature over time. But it should still be a good sized chunk. I would guess over $100 million recognized in Q1 if this does make it into Q1. That might be related to some of the weirdness that we have seen here with the rollout strategy. My guess is that Q1 is going to be the weakest quarter for Tesla this year. They've got the Model Y ramp up in Shanghai, they've got downtime in Fremont, they've got the refresh for the S and the X, and Q1 will be their lowest delivery volume by far. So having this little financial boost in Q1 might stabilize those financial results a little bit, and I don't think it would be the difference between being profitable and not, but if that is something that they're looking at and they're sort of on the border, it could make sense to be pushing for a wider release now, just to ensure that they do achieve profitability. If nothing else, at least there's a little bit of extra incentive there for Tesla to get this feature out this quarter, since from a customer perspective, we know sometimes these timelines can tend to slip a little bit. All right, next up here, we've got an update from past guest of the podcast, Pierre Ferragu of New Street Research. He has increased his Tesla rating from hold to buy and upped his price target from $578 per share before to $900 a share, saying, quote, As much as the market severely corrected the recent excesses of optimism reflected in Tesla's valuation, our recent work strengthened our confidence about the solid outlook for the company. In the next 2 years, Tesla will be in a position to deliver 2 million units in 2023 and deliver earnings of $12 per share, more than 50% above current expectations." End quote. He expects that $12 per share to then carry an earnings multiple of 50 to 100x at that point in time. So speaking of price to earnings ratios, I know a lot of you were a little bit critical of the 50x PE that I used on the valuation episode on Friday. I will revisit that hopefully later this week. Anyway, Pierre says that, quote, "Tesla is the #1 stock we recommend buying in this pullback." End quote. Well, I guess good timing with that call. All right, last couple of things for today. First is Tesla short interest. So as I said earlier in the episode, this isn't as important to Tesla as it once was. Tesla is still heavily shorted, but it's more around the 5% range of outstanding shares now versus times in the past we'd seen it be more like 40%. So most recently, short interest has declined from 47.7 million shares sold short as of the settlement date of February 12th to 44 million shares sold short as of February 26th. So at the time, that would have been about $30 billion short Tesla, but only about 4.5% of the outstanding shares. The next official update for short interest will be after market close on Wednesday, March 24th. That'll be for the March 15th settlement date. Lastly today, some of you may have seen me tweet this out earlier today, but Volkswagen has scheduled a power day for March 15th, and they say, please note, this is not a car presentation. The graphic they use is centered around a battery, so potentially this could be about energy storage or battery manufacturing. Either way, certainly something we'll keep an eye on, and that will be at 7 a.m. Eastern Time, again on Monday, March 15th. That'll do it for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Wednesday, March 10th episode of Tesla Daily. Thank you.